Hey everybody, Gary with Basecamp Trading. Let's take a look at a potential setup you had in bonds this morning. You can see that kind of throughout the night, bonds was really mostly in a downtrend. I mean, the 50s under the 200, you're making lower highs, lower lows. And then we came down into here, and you could see that bonds left this really bullish bar. This bar opened right here at the bottom, closed at the top. Doji followed by a hammer bar, bottoming tail. The entire body of that bar was all buying. Another bullish bar opened at the bottom, closed at the top. And then this was the open, the old ghost pit open for bonds. The ghost pit opens at 710. And as always with the opening of any market, you had some swings here. Set up the continuation doji. Or this could have been a reversal doji, depending on which way it went. Ended up being a continuation doji. The next bar was a really bullish bar, opened at the bottom, closed at the top, and above the 50 EMA, also causing the 5 of the 13 to cross to the upside. So you triggered this as a continuation doji with a nice, strong, bullish trigger bar, and bonds pushed to the upside. But here's the good part. You actually had some really low risk entries off of the 5-minute chart available. This bar right here was part of the 30-minute bar that triggered the continuation doji on that 30-minute chart to the upside. At the same time, you were breaking out of short-term compression, triggering a bull flag. And this was a very low risk entry. This bar, the high was 176.07, the low was 176.06. On a bull flag, you give yourself a couple ticks cushion under the setup bar, so you could have a stop somewhere around 176.04. So you're risking really 3 ticks on this trade. Triggered to the upside, made a nice push, got a little pullback right there. Wouldn't have stopped you out though. The low of that bar was 176.05. Your stop would have been down around 176.04. Still, it's just like no risk. If you wanted to be a little more conservative and wait for the breakout and get some kind of a pullback on the right side of the smooth 50, you had another low entry set up right here. You had another bull flag set up. The high of that bar was 176.08. The low is 176.07. Stop somewhere down around 176.05. So again, 2-3 tick risk, and then you never even came back. I mean, the low of that bar was 176.07. Triggered it to the upside and never looked back. So some pretty low risk opportunities in bonds with 30-minute confirmation. And then bonds pushed nice and high off of this. I mean, your entry off of this bull flag right here would have been around 176.09, and you can see bonds ran, depending on how you were managing your trade, but I mean, you had at least a potential to make $1,000 with a 3-tick risk. So not a bad opportunity. Again, the 5-minute chart, you started making higher highs and higher lows when that 30-minute chart was reversing. The 5 crossed above the 18. That's giving you a bullish bias. Price pushed up, consolidated a little bit here right along the smooth 50, but then closed above that consolidation, set up a real low risk bull flag. And again, you had the potential, with a 3-tick risk to make $1,000 potentially. Again, it just kind of depends on how you manage your trade. But regardless, even if you got out back in here somewhere, that's good for around $600 a contract. And again, just risking 3 ticks, that's nothing. So some nice low risk entries in bonds with 30-minute confirmation.